analysis.
Thank you.
Thanks, Prashant.
Well, time to move on then. And let's focus on a company that delivered a very strong set of numbers, Bikaji Foods. In Q1, they looked quite good. Revenues, profitability, both of them surged. Margins as well expanded, aided by a decline in palm oil prices. Mr. Rishabh Jain, the Chief Financial Officer at Bikaji Food, joins us on the show. Hi, Rishabh. Good morning. Thanks so much for joining in. Well, give us a sense about the Q1 numbers. What were the price cuts and what was the basic volume growth that we saw for the first quarter itself?
So we've done a price cut in early last quarter around March end. So the price cut was close to 2.5%. Despite that, we had done a strong volume growth. Like we had done a volume growth close to 15.5%. Value growth is also largely the same. So this year is largely more of volume-driven growth rather than value-driven growth, which we've seen in last 5-6 years. So and also one thing that we have done a highest volume growth in last 5-6 years. We will see a CAGR of last 5-6 years. We've done a volume growth of close to 13-14%. This quarter we've done a close to 15.5% volume growth.
Okay, all right. We also have with us Mr. Manoj Verma, the Chief Operating Officer, who joins us on the show. Good morning, Manoj. Thanks so much for joining in. Well, gentlemen, what about the revenue as well as the EBITDA margin guidance that you all given earlier? For the year, you all were looking at close to around 20% volume growth, gross margins expanding by close to around 150 basis points. But your margins are looking better in the first quarter in comparison to the double digit that you all guided for. What's the outlook on all these three parameters?
So if we look at in terms of bottom line EBITDA margin, so we are ahead of what we said. So done extremely well. In terms of growth also, so volume growths are more or less, beyond what we expected or what we spoke about. Good thing is that, if volume is growing, so which means category is growing, value is not a very long-lived kind of a growth. And this time, if you look at, as Rishabh just spoke about, that our value and volume growth are line in line. So that's what, this is what we expected, and we are very much in line what we thought. In fact, if we look at this quarter, can be divided into two halves. So first half went extremely well. Latter half was in terms of, some pre-monsoons, very heavy monsoons. I mean, it could have been slightly better, but still, we delivered what we planned for.
Got it. Gentlemen, good morning. Prashant here. Rishabh, could you tell us what was capacity utilization in the quarter? I remember, at the time of the IPO when we had spoken sometime back now, you'd said that with the current capacity, the peak revenue potential would be about, 4,500 crores or so. At the end of the Q1, what was capacity utilization?
So it's close to 40-41% type of utilization. It's depending category. Like in ethnic snacks category, we are using close to 47-48% type of utilization. And in sweets, popper, it's a little lower because it's largely a seasonal based business. But yeah, at every level, it's around 40-41%. And also, our Patna CMU plant has started in end of first quarter. So that was also added in the capacity.
40 years. So, Rishabh, you said 41% is your utilization level right now, correct?
Right.
I believe there's also a capex plan that is underway or that will get underway this year. Can you tell us about that? Because 41% seems like a pretty low utilization level. You're also doing capex. So how will those numbers look, say, by the end of the year?
Yeah, so by end of the year, we'll be having the same utilization, like around 43-44% type of utilization. That's what end of this year. So largely we have done capex ahead of time. So we have a capex of next 3-4 years, what we have done. Also, we have got PLI scheme of close to 261 crore rupees subsidy from government, for which we committed some investments, which will close by the end of this year. So that's how we will take some capex, and we are in line with all the capex plan and capex plan accordingly.
No, on that PLI, how much have you received? 260 crores was the commitment from the government. How much have you got? How much more do you expect in this fiscal?
So we have received first tranche of FY22 in March. This close to 20 crore rupees we have received, and this year, so we'll file all the applications by end of this month, and we are hopeful that we'll receive another tranche of close to 32 crore rupees in this year.
Okay, all right. What about your market share from your core markets? I think Rajasthan, Assam as well as Bihar, they are your core markets. Have you gained market share? Are you outbeating the industry growth? And what does it stand at?
States, we have grown market share. Our growths are ahead of the category growth. And we have grown to the extent of, 200 basis points in certain states.
Okay. So what does it stand at now?
So if we look at, in terms of Assam has moved up in Indian ethnic snacks to about 58% market share. Rajasthan has moved up to 47.5%. and so is Bihar. Bihar has marginally moved up, but yes, there's a 40 basis point movement upwards.
Mr. Verma, if I look at EBITDA margins for the company, they have been in the range of anywhere between 9% to about, I think, 11% on the upside last 3-4 years. So is that the band? Is that, you think, the maximum you can go to 11%? I don't know if you'll be there this year or not. Or do you have levers, or maybe a change in product mix where you could go above the 11% zone as well?
So if you look at this quarter, we have posted about 13.6% EBITDA margin. So we moved up that level. And what I would say, there are two things which attributes to this. One is that, during last year, same quarter, the inflation was on the peak, right? So one, that the prices have softened down. More importantly, there's a lot of, efficiencies which our company has built in during this tough times. And that's also helping, us taking it northwards. That's where it is.
No, so that's what I wanted to know. Yes, you are at 13.6 in Q1. Can you be at, say, 13% for the whole year as well? Are you confident of that?
Should be, yes.
Okay. All right. Okay, gentlemen, thank you very much for joining in. Good chatting with you. Thank you for... okay. Well, that is Bikaji Foods. Just to go back on the market for a bit. Okay, it is a 100-point decline now. Full 100 points. 19,633 is where we are at. And if I talk about the major movers and shakers on the downside, it's the same list. A lot of weakness on metal stocks. A lot of weakness on a lot of the IT names as well. There's no support from IT coming anywhere, or ITC for that matter. And actually, there's hardly any firefighting.